All right. All right. All right. Let us see what's going on here. We're a couple of minutes early, but we'll get going. This is Futures Brizio here. It is about 3 minutes before 3 o'clock on Thursday, April the 9th. Hope everybody had a good day. Did drop a video this morning. I'm going to try to do a couple of these live streams. I figure the worst that can happen is they'll just end up being recorded videos on the channel. So as always, make sure you smash that like button, subscribe to the channel, and any questions or comments, make sure you leave them down below. And we'll jump right in here. I'm going to take myself off the screen here. I guess I can leave myself down here. And we'll just get going. Okay, so let's take a quick look where we're at here on futures and our where we ended up the day here. So we ended up taking shorts. So here's where we ended up. Okay, a short on the Euro Aussie. We're short on dollar Swiss, long on Swiss yen, and that one is not working out the way I hoped, but we'll look at it. And long on the Aussie US dollar, long on the Kiwi yen, and long on the euro dollar. A lot of positions, probably way too much. Okay, and long on the Aussie yen. Okay, so we'll take a look at all those. Also, take a quick look at our those trades that we took in futures in the grain markets, and then we'll wrap it up. Okay. So I'm not going to go through all the pairs. We're just going to look at these ones that I took. So let's jump over to Euro USD first. And you can see that is moving up here. We've got a lot of weakness in the US dollar today. Not as much strength in the euro as I would have liked to have seen. I mean, it's trying to go up, but at the end of the day here, I'm not sure if I'm going to hold this position or not. Maybe I'll let it go into tomorrow and see. I mean, by the price action here on the daily chart, I mean, we had this downtrend. We did appear to put in a higher low here and then moved up and took out all of this, these swing areas here. This was probably our last swing area before this low was put in. This is kind of an equal high. We've now easily broken through that. So I may just hold it. I mean, it could just be, it's just going to take a little while for this to play out. So but right now, obviously, like I told you guys this morning, some of these entries can be late, just by nature of the fact that it's a daily chart and that it is an indicator, which always has some lag to it. And so sometimes I do have to kind of suck it up and go through a little drawdown before the larger move actually kicks in. So maybe that's the way it'll go. But like I said, for now, I'm just going to hold on to this. Okay, dollar Swiss short is obviously the opposite of the euro dollar. But you can see again, you know, we definitely have the weakening dollar, which is the red line. And we've got the Swiss franc, which looked like it was really picking up a lot of momentum today, but that's really flatline now too, which is causing this trade to be kind of neutral right now. So again, we'll see what happens. Um, we did fail to put in new highs after this daily pullback right here from a few days ago. Actually, more than a few days ago. This was last week. You see we made multiple attempts to go higher through this 80, about the 0.80 area. And so, we'll see again whether we're just taking a little pause here and we get some more strength in this market. which what we need is continued dollar weakness, but we need the Swiss yen, excuse me, the Swiss franc to pick it up a little bit. All right. Euro Aussie. Again, strengthen the Aussie. The euro, again, like I said, not really doing too much, kind of neutral. So again, we in this case we want to see a weakening euro because if the euro Aussie, if the this pair goes down, then what we ideally want to see is a stronger Aussie, which we are, but a weaker euro. So that is a little bit of a conflict because, as just showed you, I'm also long the euro USD. So I'm going to have to take a hard look at those and probably cut one of them loose. But for now, they're both open. All right. Now, as I've also stated in the past, a neutral currency against a strong one will still cause an uptrend, and a neutral currency against a weak one will also still, again, depending which side, which currency in the pair is first. Basically, a neutral against a weak or strong will still generate movement, just not as impulsive as a strong against a weak. Okay. So you do have to keep that in mind. So if the euro just kind of flattens out and levels and the Aussie keeps going up, then this pair still will fall. And, the euro dollar will still continue to rise if the euro is neutral and the dollar continues to weaken. It's just not going to have the impulsiveness that you have when you've got divergence in those two currencies. And unfortunately, we're not seeing that right now with the euro. So those are just decisions that I have to make here as I, kind of go forward with this. All right. So let me see here. One sec, guys. Um, yeah. Okay. Just doing a little sound check on my other computer. Okay. On to Swiss yen. This is the biggest disappointment of the day. But again, we have potentially a strengthening Swiss in a weakening yen, which should drive this pair higher. Now you can see obviously the candle is still open, so we're still making some headway here. Again, this is probably another one I will hold on to. Um, and just to see if we're just kind of taking a little pause. To me, this is kind of the critical area right here because we were trending down. So this is like the last pullback area, somewhere in this zone right here. So I would definitely need to see price. If I can see price get above here, then that would really push this higher. If we get up to this level, and then I start to see, some weakness setting in, I probably will cut it loose. But for now, I'm probably going to just keep holding on to this, and we'll just kind of see how it goes. All right. Aussie USD again. This one still pretty confident about. You can see quite a nice divergence here in these two. So we're gonna keep on with that one. New Zealand yen and Aussie yen. Let's take a look at those. Again, pretty good divergence here on the daily chart, 7-day look back. So I'll continue to hold this one and look for at least a short-term target back at these highs around 94. If not, then up around 94.67 or so, 70, 94.70 up in here, but still pretty confident to hold that one. Again, nothing moves in a straight line, so we got to expect that we're going to see some jumping around here and some pullbacks. Same thing on Aussie yen. I would expect to see this, the way this is moving now, to hopefully get back to at least this prior high right here, which is, probably going to take at least a couple more days. So whether I hold this into the weekend or not, we'll have to see where we're at this time tomorrow. If we're close to target or at target, I probably will just close it heading into the weekend, especially with all the uncertainty with what's going on out in the Middle East and everything. Not sure I want to hold that through the weekend. But I will hold it overnight tonight, and hopefully, like I said, we see some more pushing back up here uh, as the yen hopefully weakens a little bit, and that's the plan right now. So the euro trades are the ones that I'm not really too sure about, and on the flip side of that, well, yeah, not really so much dollar Swiss, but the euro dollar, euro Aussie trades, we'll have to see. And again, that's mostly because is the euro is kind of neutral right now. It's not that it's strong or weak; it's just kind of neutral, and that's causing a little bit of slowdown in these markets in those two pairs. All right. So that's kind of where we're at now with Forex. I got plenty of open trades. Again, I will take a little bit more of a deep dive at these as we head towards the close at 5 o'clock and whether I want to shut any of them down now or just let them run. Right now, I'm pretty much looking to let most of them run. Although again, I might pull the plug on one or two of them, just to take a little bit of risk off the table. I do have a lot of trades open. That's makes me a little concerned on my funded accounts, even though I don't have really big position size open. And I don't take big position sizes for that reason, so that if God forbid, something happens and everything heads towards stop loss, that I don't lose the account when I'm not looking. So I would rather just take the hits and still be in the game because I can always recover back. So yeah, so that's where I'm looking right now. And let's see. Futures. Let's see where we ended up today. I don't know. Sometimes my broker does not let me keep these trades open, but I didn't get any alerts that they closed them. So let's just see where we're at. Yeah, so here is wheat. You can see it did move lower. The market closed. I was sitting right at a $500 profit. So the market's closed now, so I cannot close this trade. You can see there is a pretty big demand area sitting down here. So let's see what happens when the market reopens tonight for the electronic session. I may just end up closing it then. Hopefully, we don't gap higher and I give all this back, but we'll see what happens. Like I said, I will let these run. If they're in profit, I will let them run into the close, and then we'll just see after that. And then for corn, which is the other one, also in profit, not by very much, $125. So same thing. We're kind of sitting at some support here. Um, Although we do still have this pretty big gap below here. So I was hoping we would get a break and come down and try to fill this gap, at least down to maybe, somewhere in here. So we'll see what happens during the electronic session tonight. Um, and those are the only two that I took. Let's see here. 4-hour chart. That's where I was taking these off of. Yeah, not, there wasn't anything else today. We did technically have an entry in soybean oil again, gap down, lows took out this low right here, kind of a weak retracement up, a little bit of an attempt to fill this gap, but not terribly good, but it poked into it. And then we did have a signal on the stochastic RSI. You can see right here, coming out of the oversold area and moving down back below the 80 level. So that is technically an entry, but I didn't take it. I had the L2 on. I felt that was enough risk. And with those two trades still running after the close, I didn't want to go with a third one there. So we'll see ultimately how those two turn out for us. Okay. So on the funded account, I know you can't see it the way I have this thing screen shared right now. I might be able to. I'll just tell you, I showed it to you earlier today. I'm up about $450 on those two accounts right at the moment, each based on those trades that I told you. Some of them are in decent profit, some are in loss. So balancing out about plus 450 right now. So just slowly making my way up to the profit target. I got to get to 55,000 to get funded on those two challenges. I do have the other one, the $25,000 one that I've had for a while. That one's already funded. In fact, I'm going to be probably close to taking another payout on that one. But I really wanted to follow the journey on these two $50,000 ones I took because I opened them right around the same time. And so I'm trying to, and it's two different prop firms. So So far, I don't have any complaint with either one of them in terms of just the functionality. They both happen to use match trade for the platform, which is fine. I mean, again, there's a lot more on there than I use, but at least I know where to press buy and sell and how to set a stop loss and how to modify and close position and set a take profit. That's all I care about. So as long as I can figure out how to do that, I don't care about the other stuff. So, but they're two different prop firms. I'm curious to see about Fund Your FX. And again, I'm not here to sell anything. I don't have any affiliate links or anything. But I wanted to try Fund Your FX because they don't have a consistency score, which Funded Trader Markets, which is the other one I have, has a consistency score, which can be a real pain in the ass, honestly. Um, but when I did get the payout from them last time, I had the payout quick the same day I submitted it, and they're generally very responsive when I have questions. So I'm not thrilled about the consistency score thing, but it is what it is. And since the account's open, I'm not going to like purposely blow up the account and then just because I don't want to trade it anymore, I'll deal with the consistency score. And the way I trade, again, I don't take really large positions because I'm trying to manage risk, which in a prop firm challenge, a prop firm account, managing risk is absolutely your number one thing, more important than how much money you're making on any given trade or day. Because if you hit the drawdown limits, whether it's your intraday or your total drawdown, you blow the account anyways. So there's no point, over leveraging and taking a big chunk of risk because if you're wrong, you blow up the account and then you got to start over again. So uh, steady and slow is kind of my slogan with that. I might be going a little too slow, admittedly, which I think sometimes makes me take too many trades because I'm trying to speed that clock up a little bit. So instead of taking maybe slightly larger positions on better trades, I'm taking smaller trades, but on more positions. And I know that's not necessarily good, but that's something I'm working through. I was still really kind of back testing and trying to perfect this CSI indicator and what settings I like best on it still. And until I feel like I've reached kind of a zen area on that where, the look back period is where I want, not that it's going to be perfect on every pair and every situation, every setup, but overall, is it okay? Because I really don't want to have two versions of the indicator running on the screen, which I know I've had that the last couple of days where I've had two different look back periods. I really don't want to do that because it just makes the chart too busy. It's too confusing and it makes you second guess. And I just rather have it up there once and that's it. And I'm just going to try to come to a settlement on the setting. And I've gone anywhere from 7, which is what it's at now, which is the default setting I had it coded with. I've gone all the way up to a 34, which is a Fibonacci number. And the look back, that's too long. And then I went back to 21 and I felt like that was okay, but I still am back testing. Sometimes it's still too long. It's given me, late entries. And on a daily chart, a late entry could be like a whole nother 1 or 2 days after the move starts. And at that point, you've probably missed a big part of the leg of that particular move. Not that to say it's going to reverse, but there probably will be a pullback coming and then I don't want to be jumping in at that point. So, but like as everybody knows, if you're using an indicator, you can tweak an indicator setting and make it more responsive, but that's also going to generate more false signals too. So it's that kind of like fine balancing act you have to put on that, you're getting to the point where you're getting enough signals, not too late, but enough, to keep you from sitting on your hands forever and missing trades, but not too fast that you're taking false signals. So I'm still trying to debate that, and also whether I want to keep the live feed on, which it is right now, because again, the live feed can lead to taking bad trades during the session. The Swiss yen might end up being that situation. I don't know, because earlier in the session, the Swiss yen was showing. Let's see here. The Swiss yen was showing more of a diver. I got to go back to the daily chart here. The Swiss yen was showing more divergence here, where the Swiss was really uh, earlier was seemingly more aggressive, and things have kind of quieted down a little bit. And so, we'll see. Whereas if you wait for the candle to close, then you don't take any action until the end of the day. You got to wait for that candle to close and then see what it is. So on the daily chart, that's 5 o'clock New York time. You wait for that candle close, and then if you think there's a signal, then I could always enter it during the Asian session, and then just hold it through the night. So that's the drawback. So the settings I've played around with on the CSI have been like 7, 10, 14, 21, and 34. Again, we'll throw out 34. It's too long. So now you have 7, 10, 14, 21. The difference between 10 and 14 is pretty negligible. But there is, a pretty big difference between like 7 and 14, 7 and 21. But as I go through it, it really depends on the pair and the volatility and the setup. Some pairs are just more liquid and, the moves happen a little bit quicker and there's more volume behind them. So, that can play out on the chart. We look at something like CAD Swiss. This looks like there's a sell set up here, right? If you look at the indicator, you've got the blue line, which is the Swiss franc bending up and the CAD bending down, but yet, look at the price action. It's pretty well muted. It's tried to go down here a few times over the last week, and it just keeps getting snapped back. And this is just overall a pretty ugly chart right now. But this isn't a pair that moves all that much. It doesn't have a lot behind it. So I know the other theory is, well, just don't trade pairs like this, just only trade pairs that move. But if I zoom out on this pair, it does go through some periods of nice trending, like back here, but it does go through long periods of sideways action, like here, and maybe what we're seeing in here. So, but every pair goes through those periods. So, um, at this point, I'm not really ready to throw out any particular pair. I think it's more of just kind of a coming to a decision about which look back period is best. And when it's in a trending market, pretty much any look back period is going to be fine. It's when it gets into these consolidation times or maybe transitional times from distribution to accumulation or vice versa, going from selling to sideways and then to buying, or going from buying and then selling, or sideways, which is distribution, to selling, with kind of that rollover of the trend. I think that's where the indicator settings are more important, to keep you out of bad trades. Whereas, like I said, during a trending market, pullbacks, pretty much any of these time settings will work, because they're, you know, it's like shooting fish in a barrel during a strong trend, right? It's hard to screw it up. So, but anyways, that's something I'm kind of still grappling with. Once I kind of settle on that, then I probably will step up my position sizes a little bit. Again, always keeping in mind that you're managing risk and not profit on a funded account. You know. Sorry, I needed a drink. So if you've got a $50,000 funded account, quote unquote, you don't have $50,000. It's not like a personal account. If you got 50,000 in a personal account, then you've got 50,000 to trade with. But in a funded account, a $50,000 funded account is not 50,000. The only thing that the 50,000 gives you is the margin. It gives you the leeway to take on up to a certain amount of risk, right? You can trade more trades or larger lot sizes because you have more margin based on that $50,000. But if you only have $4,000 you can lose in a max drawdown on that account, then really you have a $4,000 account. You don't have a $50,000 account, right? Because if you lose, if your max drawdown is $4,000, it's like usually like 5 or 6%. So, well, let's just do 5%. That's $2,500. So if it's 6%, so it's even less. So let's say, whatever, let's just say $3,000. If your max drawdown is $3,000, then really you have a $3,000 account that you can leverage up to 50,000, which again, if you don't know how to manage risk, you're going to be out pretty quick. So I would rather just take smaller trades, irregardless of my indicator settings and how I feel about it, because again, if I have more than a few trades running, and for some reason they all turn against me overnight while I'm asleep and I get stopped out or I go into big drawdown, I'm not going to blow the account up. I'll have drawdown, but I won't blow the account up. Okay. Some people will say, well, if you get really way into drawdown, but no, don't blow the account up, you're almost better just blowing the account up and starting over again, because now you've got to dig out of that hole, and come back into profit so you can either get funded or get a payout. Whereas, if you just let the account go to trash, yes, you got to pay the fee to start over again, but at least you're starting back at your original balance and not trying to dig out of a $3,000 hole. So I think there's something to be said for that. But, you know, I rather just be more cautious up front and just not take any big losses and cut losers early than, ponying up a couple $100 more for another challenge that I didn't really need to do, because if I had just managed my risk better. So, all right. So, yeah, so that's my long philosophy on that stuff. All right. So that's about it, guys. I'm going to jump out of here. I hope you enjoyed it. Make sure you smash the like button, subscribe to the channel, questions, comments, leave them down below. And I'll be back tomorrow. It's Friday, so obviously a short day on Friday morning session, and that's pretty much it. Nothing really goes on in the afternoon, so we'll see how we wrap up tomorrow, and I'll keep you posted on what I decide with all these trades, and or if I decide to take any other ones. Which right now I have no intention, based on what I've got open, to take any more. But I may close a couple of these, I may not, and that's going to determine whether I look for any other setups. But if I don't get any, that's perfectly fine too. All right, so that's it. Guys, have a fantastic rest of your day, and we'll talk to everybody soon.